NutraBase is back with another mind-blowing product, and that is Gold Hydrolyzed Pea Protein with 3 amazing flavors. We have added.
You're going to put your head in the noose just like everybody else does and hang themselves. But I'm telling you, you don't. You're going to put your head in the noose just like everybody else does and hang themselves. But I'm telling you, you don't have to do those things to learn the lesson. Learn from my mistakes. Learn from the fact that I lost fortunes doing stupid stuff, stupid things. And it's not shameful for me to admit these things. I would want to learn from someone that's open and honest. This is how I screwed up in the past. And I lost lots of money. And I believe these things that are out there, they're still being promoted by books and authors and things. And it's garbage because they only talk about this is what you can make. This is the pattern that works. And they fixate on those positive outcome and not nearly enough on the things that are going to hurt you. That's the reality. You're going to lose money. Even trading with what I teach, you're going to lose money. Are you going to keep losing money in the same trading day, in the same environment that you keep losing previous weeks and previous months? Most of you probably won't endure that because your money management is lacking and you'll blow out before that even becomes an issue. Suddenly, some of you are thinking to yourself, wow, this trading thing is a little bit more involved than I thought. Exactly. It's very easy to do, but it's next to impossible to accomplish profitably because you get in your own way. You don't have boundaries. You don't have limitations on what you can and can't do. And you expose yourself to risks, limitless risks. Without a stop loss, you're saying take everything in my account and more. And given that opportunity, it can and will. I have seen that firsthand. I know that intimately. That's a feeling you don't want to ever have. And I can tell you, in those instances where I was a 20-year-old and I knew that was coming, I still wouldn't close the trade. Think about it. I'm in an account. That account maybe had $17,000, $18,000 in it, $20,000 in it. And I'm in a position and I'm holding on to it. Live cattle. It's going to move. Yeah, it's moving against me. And it's way beyond what I've been thinking this is the area I would like to get out that goes down here. But I don't want to be wrong. I don't want to be wrong, man. Come on, I need a winner. And if I can come back from this is like the underdog story. This thing went against me so far and I still came out. Well, I came out. I came out of that trading day with a blown account. So you have to have patience. You have to say, regardless of what anybody else thinks about me, regardless of whatever my mentor might suggest, I have to have my own limitations. These are the rules that I have to adhere to. That's it. He teaches 1% risk, but I can't. I got to do 1/4 of 1% because I just can't. I can't tolerate it. I gotta use that little bit of money to do it. That's the right way of doing it. If I or anybody else says this is the minimum threshold that you should reach in terms of managing risk, it's always there. But if you take that 1 degree or more beyond what the educator like myself or anyone else that's teaching sound risk management, and you make it even more limited, that's actually a good thing. And some of you are like, oh, well, you can't get rich. I can't make a lot of money risking 1/4 of 1%. You don't know math. Anybody that says you can't get rich risking 1/4 of 1% failed rudimentary math, period. Because you can do a whole hell of a lot risking 1/4 of 1% if you know what you're doing. But the problem is you failed rudimentary math. That's the first problem. 2, you don't know how to trade. You don't know how to trade because you don't know that these patterns repeat multiple times inside of 1 week. How many weeks are in a month? Generally 4 or more. How many months are in a year? 12. How long do you plan on being on this spinning rock? It's uncertain. But as long as you have mental faculties and health to do so and equity, you probably want to keep trading, right? So all that is potential opportunity. But you right now listening are probably looking at every single individual transaction, every trade. This is the make it and break it. This is the be all end all. This has to work or I'm done. Why? Why did you just make this a summer blockbuster plot where you have to absolutely conquer the biggest boss of the most villainous organization on the planet? Even the X-Men wouldn't even mess with this person. Okay, that's you turn this trade into. It sounds silly when you think about it because that's exactly what you've been doing. You've turned it into an Olympic feat when it's just a simple trade. But you're trading with such a high degree of leverage in an environment where it's not likely to work in your favor, but you just had to push a button. Now you're looking for the theme track to Interstellar. John, I'm going to figure out the problems of the universe and I'm going to beat this trade. Come on, man. You're doing too much. It's either you're buying it, it's going to go higher and you get out, or you're shorting it and you're getting out lower price. If the market's not providing you an atmosphere or environment that provides it in a way where it's symmetrical, all things being equal, risk on, risk off, liquidity's obvious, the market's moving very nice, clean price levels. That means it creates imbalances, it comes back, rebalances, and then starts to expand in the direction you want to see it. Order flow is working in your favor. All those things are firing on all cylinders. That's the environment you want to be trading in. And that's what I teach you how to identify. But I'm also teaching you, and some of you are kicking and screaming, you don't want to learn the lessons when to stay out, because guess what? That's being told you can't do something by dad. A lot of you have daddy issues. You don't want to be told when you can and can't do something. Don't try to trade with a 2-pip stop loss because you see other people saying they can do it. Listen, I can doesn't mean I do. Do you hear that? I can, but doesn't mean I do. Just because you see somebody else do something, that means that they've said they've done something already. It's hindsight. They've done something. That's not an invitation for you to try to replicate that. The circumstances that caused that event, even if they did make money, you can't go back in time and do that with them. And you can't take every instance of when someone else said something just like it's not going to make any difference what anybody thinks. They're not spending your money. You're spending it. And you're able to do it without ICT. That's what I want. I don't want glad handing. I don't want people holding on to me saying, I need you to do this. No, you don't. You don't. I want to live the latter stages of my life principle oriented and have a clean conscience that the things that I've known for years that I was told not to share with anybody else, I had to create a language. In that language, it wasn't easy. Let's be honest. It wasn't easy for me to try to bridge what it was that goes on versus what could be talked about and not get me in trouble. Oh, what do you mean by that? You're not supposed to know this stuff. So if I make up, well, terms and usages of theories that would be very, very close, very, very, very close, okay, to what the actual algorithms do in the marketplace. Now, when I say algorithms, there's two of them that dance together. The engine that runs price, that is the algorithm. How does that work with smart money algorithms that engage price engines? Where do they enter their orders? Where do they adjust their orders? Where do they close their orders? See, that's that synergy between both of them that I had to create a language to be able to communicate how that happens and not divulge what has been given to me that you are never going to learn. Oh, here we go with this Tom Clancy shit. I don't give a fuck if you believe it or not. You explain how I can do what I can do and find it anywhere else in any other fucking theory or retail horseshit or some super power engine, black box horseshit that doesn't work. I know it sounds arrogant, but it annoys me that people see the obvious and they still can't see it. You're going to see it. You're going to walk it with me. Every fucking candle. Nobody does that but me. And I'm looking forward to it because I know jaws are going to be hitting the floor. People are going to be shitting and falling back in it because they're going to be like, damn, this guy is exactly what he said he was. Yep. And I never had to be more than what you saw. And here's the kicker. Even after this, there's still going to be people out there and they're going to say, yeah, but he didn't do this. He didn't trade in front of you. He didn't do this and that. See, these are the same people that have sorry ass win records Their stats suck. They can only over leverage and gamble. And they call that skill. That's not skill. I'm not a 50-50 trader. Notice that? I don't want to have a 50-50 strike rate. I don't want to operate or engage in an environment that invites only that as a possible outcome. I want to be in there when the stage is set for me to obviously get everything I could possibly garner as an odds in my favor. And you not knowing those things right now is a cause for you to feel anxious. Like I'm hiding something from you. I'm promising you all the things that I'm never going to divulge past what I've already done. I never, ever have to teach those things. I have simplified things. Like there are simple macros in the marketplace that run every single day, and you can find them and make money. That's what I was talking about with that 5-handle move. You can find a 5-handle move every single fucking day. I don't give a shit if it's seek and destroy. I don't care if it's a trending day, if it's a consolidation day, if it's a classic buy day, classic sell day. It doesn't matter. I can go in, and you can too. After 2023, you'll be able to find a 5-handle move. That's 20 ticks in the S&P. You can make a career out of that. What if you parlay that up and use money management to build it up? As you make more money, it allows you and affords you to do what? Carry more contracts and not increase the percentage of risk. It stays the same. What does that mean? Well, let's say you start with a hypothetical funded account of $10,000. Okay. Oh, and you can't make a lot of money with $10,000. Well, Larry Williams did in 1 year. You can't make what? You don't think you can make tenfold on that over a course of a year? I think you can. I believe it's possible. So stop listening to these fucking people that say you have to have $300,000 of funded account to make money. Bullshit. Last time we talked, I said, what if you get that funded account for $100,000 and you just make 1.5% a week? That's 6% per month. Compounded over the year, that's 100%. That means you made 6 figures, $100,000. Tax it. You probably got about anywhere, depending upon where you're at in the United States. And I can only talk from the United States perspective. And barring any kind of, special tax treatment, the likelihood of you getting trader status in the first year of trading is not likely. You have to have a track record. So you have what? 100,000, tax it. You probably got anywhere between $68,000 and $72,000. That's a good living, folks. That's a good living. Now, if you just did that every year and you did nothing more than that, are you failing? Did you miss the mark? How do you rate in your social media equity curve amongst your friends and family on Twitter and Facebook and Instagram? You feel like you're not up to snuff with them? Stop worrying about them motherfuckers. 90% of these people 90% of them can't fucking trade. You have all kinds of potential income streams how to do this. You could be in fund management. You can be in prop firm. You can educate. You can do signal services. You can do YouTube channels. Once you learn how to do this the right way, and you can manage yourself efficiently, effectively, and manage risk properly, there isn't a living soul least interested in see what you're doing. They don't have to subscribe to your views of it. For people that don't, look at it this way. For people that couldn't afford my mentorship, they still watch my videos on YouTube. For the people that don't want to watch my YouTube videos, they still read my tweets. Doesn't matter. You have an audience. I have an audience. So there's a way for you to monetize so many ways, and it not hinge on you making your trading income support you initially. That's the major thing that I want you to understand, because see, you're all trying to get rich real quick. And I'm not promised I've done that. I've always taught, have modest expectations. Back on Baby Pips, try to get 25 pips a week. Yeah. 25 pips a week. And if you're risking 2% each trade, It builds up nicely. 5 handles can be done one time a day easily. You can really do it every session. Morning, afternoon, morning, afternoon, morning, afternoon, morning, afternoon, morning, afternoon. That's 10 trading opportunities per week. If you can nail down 5 handles, how many handles is that over the week? 50. Now, what if you aim for 50, but you just average around 25? Because you're learning and your strike rate is 50-50. Are you failing? No. Your goal, your model is to aim for that. I have a model that I'm looking for when I was, I'm not trading actively Forex now, but I was looking for 50 to 75 pips every single week, clearly. But it was easy for me to do it. It doesn't put pressure on me. And I have lots of ways to get it. I can get it from one setup. I can do one shot, one kill. If I don't get the one shot, one kill because I was either not on the charts or I didn't do it right, then I have to break that up over the course of one other trading day or multiple trading days or trading sessions. And I'm not forcing myself to go in there and try to squeeze an unrealistic expectation of 50 to 75 handles from a day that isn't likely to move that much. Now, if you can get those 5 handles one time a day and you trade Monday through Friday and you don't get caught up in trying to keep up with everybody else on YouTube or whatever other medium out there that's going to lull you into thinking that you need to be doing more because they're still doing something. Oh, this guy over here caught 10 handles over here. I got to get in here and do some more because it's stop. Listen, the banks are open from 9 o'clock to 5 o'clock. Monday through Friday, unless it's a bank holiday. And there's money going in those fucking bank accounts all the time. People are going in there and making deposits and they're doing withdrawals just because that's all going on. Do you got to run? You got more money to put in the bank? You got more money to pull out of the bank just because everybody else is doing it. Stop trying to do things because you see business as usual everywhere else. That's them doing their thing. Your business has business hours. What is it? 8:30 to 10:30. If you stay inside those 2 hours, I promise you, all the bullshit that you're struggling with will go away. And if you just wait to the last hour, 3 o'clock to 4, that's it. There's your 3-hour work week. Do one scanning on one particular day, a medium impact news event or a high impact news event. You look 8:30 to 10:30 in the morning. If you can't find it there, wait till the afternoon. Especially if the morning is shit, you're probably going to have a really good PM session. Something will happen real easy because it likes to give the smart money a cookie, it being the algorithm. But 5 handles, if you do that every single day, that's 25 handles a week. So you can do approach of looking for a trade, a swing trade of 25 handles to aim for it. And if you can't find it, if you're not skilled to be able to find a move like that on an hourly chart or 4-hour chart, no problem. Break it up. What happens if you get 2 12.5 handle moves? There's nothing wrong with that. You can find that on a 15-minute chart. But what happens if you don't have that much skill to do it like that either, and you're really trying to do that 1-minute chart because you don't like to be in there too long? So you can do approach of looking for a trade, a swing trade of 25 handles to aim for it. And if you can't find it, if you're not skilled to be able to find a move like that on an hourly chart or 4-hour chart, no problem. Break it up. What happens if you get 2 12.5 handle moves? There's nothing wrong with that. You can find that on a 15-minute chart. But what happens if you don't have that much skill to do it like that either, and you're really trying to do that 1-minute chart because you don't like to be in there too long? You want to get in there, do your surgical strikes, and get out because you're scared and you haven't built up enough confidence yet. I understand. No. Problem. Go for 5. But as a 5-handle trader, that's a realistic expectation for you to have. And if you're really, really new, by doing tape reading, you can grow in your confidence and say, okay, I see a setup that might yield 5 handles. But what happens if I go in and I get in the move and I get out with 2 3/4 and I just get out and I watch it go to 5. And then I do the same thing in the afternoon. Guess what that is? It's 5 handles. And you don't have that much time in the marketplace. It lets you get in, get out. It rewards you and you grow in your confidence. Is there something wrong with that? No. Not if you are so new as a trader that your experience level doesn't permit you the confidence or comfort, let's say it that way, to be in the risk that's associated with being in the market live. So you put your toe in the water, you feel if it's too hot, if it's moving around real quick, you go in, get your 2 3/4 move, and then bail out and watch and see if it goes to the 5 handles. And if it does, you'll grow in your confidence. Okay, if I just would have held on to it, it would have done that. Not thinking, oh, I wish I would have held on to it. Why'd I do that? No, see, it's how you log and journal. You retain the positives and you don't record any of the negative stuff. Because when you record it in your journal, negative, your subconscious retains that. And you anchor a toxic event around something you're trying to grow as a positive investment for your life. So you're shooting yourself in the foot, basically. You're trying to turn something you've been motivated to do for a positive thing, you're turning it toxic without realizing it. So that's why you're sugarcoating all of your journal experiences. You want it to be a love story to yourself. You're writing a love note to yourself every trading day, and you're doing it through charts. You're showing charts and you're putting little, I love what I'm doing. This is great that I can see this. And you're retaining that. Your brain loves that kind of stuff. Your brain loves it. It releases chemicals into your body that remembers it better than just the static memory of it alone. Think about it. When you went to a movie, maybe you've already seen this movie, okay? And you went there and you saw it with your friends. You saw it was all right, okay? And you're meeting this girl or significant other, and they say, hey, look, I really would like to see this movie. And you're thinking, oh, fuck, I've already seen this movie. All right, well, they want to go. I don't want to be a jerk. Let's just go with them. And you go to the movie and you have a great time. They're holding their hand and they're, the experience there. And now all of a sudden that movie has a positive attachment to your memory versus, yeah, I saw it. It was all right. Now you got somebody that's nice to you, that smells next to you. It's like beautiful. And it's a totally different experience. And now you add to it what? All the embellishments of what happens after the movie without being crude. And it doesn't necessarily mean the bedroom either. Going to a dinner, taking a walk and saying that was a great movie. I love having time with you. All those things are positive things that you're remembering. When you break up with people, as painful as it is to think about the things that caused that breakup, when you're not with them and they come to mind, what do you think of? I miss them when I used to do this with them. And you miss that. You ache because you made what? A positive memory about that moment with that person. And every time you think about that song when it comes on, that's why it hurts. Because you can't plug into that good feeling anymore. It's been cut off. So you don't ever want to invite that shit in your journaling. Journaling is always positive. You never, ever, ever say anything negative in your journaling, ever. Even if you did something wrong, you say, okay, this was an amazing opportunity for me to get the insights for when the market does this. You see how I just did there? I discharged and disarmed any possible chance for me to look at that losing trade or an idea that I thought would have panned out in the marketplace that was perfect example, CPI. You saw two instances where I co-signed. I didn't have to do it, but I wanted to prove to you, this is what I would expect right now. And it didn't do it. It just went right up the other way, or other way, going down. There was another time earlier in the summer where I did it where Caleb was right next to me, and literally was like, wow, that was so quick. But that same instance, I was right about it, but I wouldn't touch it. So that speed of movement and price action on those types of events, if you're wrong, the way you disarm that is say, okay, this is why we don't trade ahead of the CPI number, because it's too violent, it's too one-sided, and it's unforgiving. You can't trade your way out of it. You can't fix it. When the damage is done, it's like a neutron bomb, just boom, it's gone. All living organisms are evaporated. Everything else looks the same except for any living organism is gone. So you don't want to vanquish your trading career on one trading event like a CPI number. And you don't also want to stifle your development by recording highly emotional negativity in your journal entries. And it's easy to do. You feel like you want to do it. Don't go on social media and complain either. Oh, it's stupid so-and-so. Or I made a stupid mistake. I fucked up doing this, doing that. When you do that, you release it and it comes out of you. You think you let go of it, but your subconscious has got a lifeline to that. And it's anchored to your subconscious, and you will not cut it off. And the next time you get in the marketplace, what's going to happen is, all right, I'm getting in a trade. Oh shit. This feels like that last time it did this and this and this. And I, took a bigger hit than I was supposed to. I'm scared. Now you're worried about having a repeat of that same toxic event. That's normal with trading. You're going to have a losing trade. You're going to do something wrong. That's normal. Okay. Every one of us is doing it wrong. Okay. Every single one of us is going to have that. It doesn't mean you can't trade. It doesn't mean you're not profitable. It doesn't mean you have a good system or not a good system. It just means that you're human. But when you get in that trade and now you're starting to think about that other time when I was at band camp and that whole bad experience. I'm not trying to make fun of anybody that went to band camp, but no, I didn't go to band camp. But if you look at the logic of referring back to another trade while you're in that trade, are you managing that trade? No, you're managing fear about another trade that you can't make more on or lose more on. So your mind's divided. So the way you avoid all that shit is not to give it any energy in your journal. You take every experience, positive or negative, profitable or negative, a loss, and you make it constructive, positive installment in your development. When does your development stop? When you're dead. I'm improving myself day by day, week by week. I'm a better mentor today than I was when I first started teaching as a young man before I should have been teaching. I'm not the best. In fact, I know I'm not the best mentor. I'm not. My trading is the best and my ability to read prices is the best, but I'm not the best teacher. I wish I was better than I am. And I'm trying to be better than I am, but I guess we'll find out if this is an improvement in 2023 or not. But that 5 handles is plenty. And you can split it up and make your whole 25 handle career on multiple trades or one individual trade in the morning that gets 5 handles and you're done for the whole day. That releases you from all of the expectations of being in front of these charts longer than it's necessary, which is good. You want to limit that. So if you get your trade on 5 handles when you're first starting out, turn the charts off. Look at everything afterwards in hindsight. Don't be lured into doing more because something moves around quick. You don't want to add to what's already been given to you, and that's your goal. Stop. That's what profitable trading is. Having a goal, a business model. Okay. We call it a trading model, but it's a business model. Foot Locker don't go out there and say, you know what? We're doing so well selling shoes. We need to get into the fucking pizza business. Let's start selling pizzas and burritos. Because who wouldn't want a fucking Foot Locker burrito, right? That shit don't work. Okay. You're not going to upset the model that works for them. Okay. And vice versa. You have a model. You sit down, you've done all the work. You built yourself up, you're learning this, and now you settled in, you're going to look for 5 handles in the E-mini S&P or the NASDAQ, one or the other. I'm preferring ES, and I think you should do that too. If you want to go into NQ later on when you have more, ability, that's fine. But when it moves fast, it can be wild and it can hurt you. It's a little bit more chaotic. So just be mindful of that. Don't be afraid of it, but in the beginning, respect it, because if you don't know what you're doing, it can sting you. But you want to have that business model of knowing, when are you going to stop? See, when I go on the live streamers all the time, I'll ask them, I say, hey, look, I asked this of Trades by Matt. I asked it by Corbs. I asked it by 2 other YouTubers, and they ignored me in there because I know why. They don't want to talk to me because they think I'm in there trying to make fun of them. I'm not. I respect anybody that's doing a live stream. I would never go in there and try to be disruptive about anything like that, because number 1, it takes a lot of focus and it's a dick move, and 2, I can respect the fact that they're doing it, because there isn't a lot of people that are willing to get out there and literally live stream. So that is ballsy in anybody that does it. Yeah, that they got my respect, even if they blow up all the time and blow their accounts and go to maximum loss multiple times in the same week. It's still respectful that they do it. I want to ask them questions like, hey, when do you stop? What draws the line in the sand? Say, okay, I'm not trading anymore today. I've done enough, either because of the loss or the win. Like, how do you get to the point of contentment where you no longer feel that it's needed for you to be in front of the charts? Have you even considered that in your development, in your building of your trading plan? Because it's easy to see, oh, it's early. I've already got my 10 handles for the day. That's 2 days work. That's 2 days of work. What do you think? You're going to go in there again? Because that's exactly what you're going to do. You're going to think, the market's on fire. You got to push your edge until it's dull and you lost what you made and more. Plus commissions. Don't you feel smart? Twitter can get you hurt by people that don't know what the fuck they're talking about. Your business model is only profitable when you follow it. Your trading plan is only profitable when you follow it. Your wife, your husband, your significant other, your children, your dependents, your best friends, your coworkers, your boss, and ICT, we're not going to be there to help you press the button and manage it and tell you when to stop. That's personal responsibility. And all of that rests on your shoulders. And if you're not in tune with the things that will lure you into dumb shit, gambling, going in there one more time, you got a good day. You made $1,000. You didn't try to make $1,000. It just happened, fell right in your hands. Don't look at that as, oh shit, I'm way better than I thought I was. Fuck, I've been thinking about this all this time, thinking I wasn't that great. Look how good I am. I'm gonna go out there and do this 5 more times, because shit, that's $6,000. Who doesn't want a $6,000 day? And then all of a sudden you're looking at your account, it's gone. I've done that. I've done it. I've done that. Okay, so you have to know when you're going to pull the plug. Problem is you, just like it was me in the beginning of my own career. And nobody likes to hear that, and no one certainly wants to admit it. And some of my students that have failed, they hate, that's what I say. Oh, it's wrong. You're just a terrible teacher. Well, I'm not a perfect teacher, and I don't think I'm the best teacher, but I don't lie to you. I tell you the truth. I tell you how to fix it in my best opinion, the most heartfelt, well-intended instructions. That's what I try to give, because it would be horrible for me to pretend that everybody could walk into this and do well and not have any hardships. And I've never painted that picture for anyone. It's hard as shit. It is so hard. Only because you are a formidable adversary. Now, if you take all that toxic shit out of your personal life, the way you think about things and people and relationships and how everybody else is supposed to see you, take all that shit and throw it out. Don't give a shit about none of that stuff. Oh, but I'm not wearing the latest Threads. Who gives a fuck? Who cares? But I'm not driving the who gives a shit. I can't afford to go eat. Who gives a shit? That's all stupid stuff. That ain't putting money in your pocket. That's not putting bread in the bank. That's not helping your family. That's not providing legacy wealth. That's a right now bullshit worry. If you take the energy that you place in worrying about stupid shit and people that don't matter, and you apply it to yourself and how you can build yourself up so that way you could be useful to yourself and your friends and family that are worth being around. Yes, I said that because there are family members that you shouldn't have in your small circle. And when I cut those out of my life too, man, happiness. Because I'm going to tell you something. When you start making lots of money, your fucking family does not like that. They don't like that. They're going to look at you and say, you know what? This motherfucker here, I never noticed this bitch has an ego problem. Look at him. He's buying these cars. Now, I didn't drive my car over to their house. I didn't say, this is how much I pay for my car. They just found out I bought these cars. This motherfucker, look at him. Now, these are my family. I'm a young guy. I'm trying to do what makes me happy as a young man. And I had family members literally get a case of the ass because I was enjoying what I was able to do. Your friends, don't be surprised if they don't like the fact that you're successful. And they're going to be spiteful because they are too fucking lazy to do the same things that you're willing to give yourself a chance to work and grind through. Success is not something that falls in your lap. You got to work for it. And that means that you got to take your attention away from stupid, silly shit and stupid, silly people and apply it to hard work and be diligent about it and show up every day. And when you do that, results will come. And you're going to find out who your real friends and family are. Because the ones that really love you, they're going to say, you know what? If anybody was going to do it, it was going to be you. And I'm so proud. Look what you've been able to accomplish. That's amazing. Can you show me what you did? Not, look at you, motherfucker. You think you're better than me? Hey, if you got all that money, why don't you give me some? I heard more of the latter than the first. To be honest with you, I'm going to tell you something. Not one person, not one family member ever, not one family member ever said, congratulations, you deserve it. You worked hard for this. It was not given to you. You did all the things to get to this point. Well done. I'm proud of you. Not one of my family members did that. Not one of them. And I handed out and I bought pool liners and put new roofs on their fucking house, paid for their fucking vacations, paid for their fucking kids' clothes and fucking shoes, paid their utility bills, put food in their fucking house. Ain't never said anything positive. So why would you expect any of your friends and family to do the same for you? If they do, wonderful. They're good humans. But don't go into this expecting everybody else to say, you know what? Look at what you've done. You should be proud of yourself. I'm proud of you. Fuck that. I didn't need that. And people that are successful, they don't fucking need it. They don't need that. Let me tell you something. I wanted and I would give anything to hear my grandparents tell me that. But because I can't do that, to answer your question, the lady that was saying, what's my deep-rooted, driven passion? I've always done things with the expectation that I could one day hear my grandfather and my grandmother tell me, I'm proud of you. Those two people were my real mother and father. And I miss them dearly. And I wish they could see who I am today. I wish they could see who I try to be. I'm not perfect. I make a lot of mistakes, and I'm not eloquent in the way I talk. Sometimes I use a little too much blue collar language, and it's not something I sit down and script. Obviously, this is off the cuff. Every time I'm live like this, there's no script. There's no stuttering. There's no pausing. I'm not missing my lines. Okay. I'm talking right from the heart. Sometimes it's going to be bitter. Sometimes it'll be funny and sweet. And sometimes it'll be good medicine. But I wish I could hear them tell me, but I can't. But everything that I do in my life, I do with that generally is the first thing. Now, everything in my life I try to do that would be pleasing to God. And I fail miserably a lot with that. And that's life, folks. I mean, we're all messing up every day. I ask for forgiveness, and I try to do the best I can to, keep pressing on. But if you take toxic things in your personal life or hurtful things that other people do, or if they don't give you your accolades and say, hey, look how well you did this. Some of you might take that like I did as a younger man, because when my uncle sat down with me when I was living with him, paying room and board, and I was building up money in my account, I was excited, and I said, look what I've done here, Uncle Stan. And he was like, is this real? I was like, yeah. And I showed him broker statement after broker statement after broker statement. He was like, and I watched him sit back in his sofa, and I'm waiting. My Uncle Stan's going to tell me, good job. No. That's not what this motherfucker said. No, that's not what he said at all. This is what he says. When we let you move in, the idea was for you to get on your feet so you can get out and get your own place, not sit around and get fucking rich. What? Like, that's the moment where you hear that record scratch where it's like nice music's playing. Like, what the fuck just happened here? That was that moment. And honestly, like, I wanted to freaking cry. I'm like, what? Like, I'm waiting for the moment. I'm waiting. My grandparents are gone. They're passed away. And I'm looking to this man as like a father figure, and he's gracious enough to let me stay in his home. And I'm showing him, like, look, you told me about this shit when I was 15, 16 years old. I didn't want to do anything with it. Now here I am. I'm fucking making money. And you telling me that? That's the fucking shit. That's the fucking first thing that you reach for out of your fucking mind. That's the thing that you want to tell me? Ugh. Man, I had such a range of mixed emotions, from rage to it was everywhere. And I watched him. And now, older, as a man of 50 years old, I can tell you really what he was experiencing was envy. I saw right into his soul that night. This is the same man in 1983, he made money in sugar, bought himself a condominium in Ocean City. Not that that's a big deal, back then it was. But then he never was able to make money after that. And he refused to learn from me. If I sat down with him, he would try to do the opposite of whatever the hell I was doing. And one day I said to him, I said, Uncle Stan, if I tell you I'm buying soybeans tomorrow, why the fuck are you trying to short it? But I'm trying to do everything on my own. That's not on your own. You're trying to be contrarian. And I had students in my first year, 2016 group, that literally came in doing that shit and then complained to me 6 months, 8 months, a year later. I saw what the fuck's going on. It doesn't work. What are you doing? Well, I'm doing this and doing this. I said, okay, well, that's everything opposite to what I'm doing. What are you thinking? Like, that's insanity. You're trying to get a different result, doing the same shit over and over again. Well, my uncle that night says to me, yeah, you were not supposed to be getting rich here. And I'm just like, Uncle Stan, I wasn't expecting you to say that to me. You know, what the hell did you expect me to say? Like, what did you think I was going to say? And I was like, good job. Like, wow. Can you show me how you did it? Like, that's what I'm here to do. Like, I'm sitting down showing you, like, you're fucking around trying to be a stockbroker, and you're not making any fucking money. JW Gant, that's the bullshit he was doing. They were trying to push this fucking stupid ass stock. It was a boiler room bullshit, okay? Out in Owens Mills, he's fucking trying to do something. He's not a salesman, and I love him, but I'm being honest because, like I said, I don't sugarcoat shit. He literally was the worst fucking salesman in the world because he can't sell anything. He doesn't believe in anything. You have to believe in it. Like, you have to believe it. If you can't believe it, if it's not real to you, how the hell are you going to sell it to anybody else? My life, my creations, these concepts, I'm not tired. I got to check my battery and see if I still got some fucking life here because I'm ready to still talk because I'm passionate because this is my whole life. I know this shit works. And other people around the world now know it works. They ain't believing none of the bullshit. But my uncle, my fucking uncle says to me, you ain't supposed to be doing what you're doing, basically. How the fuck dare you? How dare you do this in my house? Like I was fucking growing fucking weed and, you know, processing cocaine in this fucking house. Like that's how I felt. Like I was doing something illegal, you know? So I said to him, I said, well, look, you know, this is not what I wanted to talk to you about like this. Like I wanted to show you what I was doing so that way you can do it too. And the only thing he was interested in is when I was moving out. So, okay, no problem. I got myself an apartment, moved out over to Carroll Island, which was a scary feeling for me because I've never lived on my own prior to that. And it's just, the isolation initially was too much. And I started losing money because I didn't like the feeling of being by myself. Like I felt anxious and anxiety, you know, would kick in. And there was no reason for me to be afraid of anything. It's just, I was thrust into living like an adult when I was basically a student and a hospice nurse for my grandmother. Like that was my whole life. So it was a weird adjustment. And I took that feeling of fearing being alone and being isolated because I had always been around my family, but I would always isolate myself. Like they would all be in another room and I would be in a different room because I wasn't in sports. I wasn't in all the bullshit. I didn't like them smoking. I would try to hide from the cigarette smoke. I'd be on the floor sitting down with my shirt over my nose, trying to keep myself from breathing the secondhand smoke. That's what it was like growing up, childlike ICT. But I didn't come from money. I didn't come from anything silver spoon, none of that shit. And my uncle, same way. And he basically manifested envy, jealousy, and fucking rage. And it was so overwhelming for him. I don't think he understood the gravity of how he presented it to me. Like in his mind, he probably was just thinking to himself. No, it came out of his mouth. And he sat back and like, he was just like, like he lost everything he owned at the casino table on one roulette spin. That was what it looked like. That's what it sounded like when he sighed and all the oxygen left his body and his chest heaved up and then emptied himself. I remember looking to the right, like, this motherfucker's in my house doing this and I can't do it. I wasn't successful. That's how I know what it was now. Because we talked later on. Years later, he told me, he goes, when you told me that and showed me those broker statements, I was jealous. Like, why couldn't I do that? You know, I did that younger. I introduced you to it. Here he is. He's shitting on my parade here. Okay. And I'm feeling generous. Like, I'm going to try to teach him how to do this stuff. No. He ain't having any parts of that. He wants to tell me that this is absolutely the worst thing I could have ever done. And that weighed on me psychologically. When I moved out 3 weeks later, in my apartment by myself, waiting for the rest of my furniture, because I only had one couch. No, it wasn't even a couch, it was a love seat. I'm thinking to myself, man, like I felt like I was kicked out of my parents' house because they caught me doing something illegal in their home and they disowned me. And because I felt that way, I went into the marketplace and started doing what? everything I've talked about tonight. I wanted that feeling of isolation, loneliness, anxiety to go away and be replaced with what? That spirit of invincibility. Like, fuck you, motherfucker. Who the fuck do I need? I don't need you. That's what I wanted. But because I was doing it with the inspiration of trying to escape a bad feeling, not taking a sound logical trade, that's not what I was doing. That wasn't even in the equation. It was, I'm just going to go in here and push this button, do 10 contracts of Chicago Board of Traded wheat, and we'll see what happens. Well, we saw what happened. We lost fucking money. Okay, that's what we lost. And I felt worse. And it would do more of the same things I talked about and described tonight. I needed that feeling to go away. So I would trade bigger, and this time, no stop loss. Because I need to be right, and I'm not going to have anything tell me I'm not right, because I'm so confident I'm right. I'm not even going to use a stop loss, because therefore, if I was even thinking less than 100% that I'm going to be correct, then I would need to stop. But because I know I'm going to beat the shit out of this market, I'm not going to use a stop loss, because then I know I'm a barbarian. I went out there and I conquered. And then I can basically dismiss this negative feeling I'm putting myself through. Instead of just saying, you know what? My head's not right. Close the charts. Let me go get out of the house and do something other than this. That's how you fix it. But I didn't do that. I stayed in isolation. I didn't let anybody come over and visit. I didn't want anybody to come over and visit because I was afraid they would read me and see what I've done to my account. Sound familiar? Yeah. These are those things that real mentors, real traders that live this shit, they're never going to talk about it because they're going to be afraid you're going to look down on them. They're going to lose their superhuman, superhero characteristics that you think that they deserve. They don't. I don't deserve it. I'm a human being. I'm not AI. I have done some stupid shit coming up as a trader. And you're doing the same silly shit. Everybody does it. Unfortunately, most people don't learn to stop it and replace it with the correct things. Sometimes they don't even realize what they're doing is the root cause because they are learning from people that are not genuine. They've never found success. So how can you be successful if you're learning from somebody that's not successful? You can't. You cannot be trained how to succeed in something if the person you're learning from doesn't understand or have the ability to be proficient in identifying what success is. How's it obtainable? What do you have to do and what do you have to make sure you don't do? Refrain from this, do this. You have to have somebody that knows what they're doing. And I would love to sit down and listen to anybody in any field that has put themselves through the level of pain and suffering that I've done myself in trading, because that's somebody that knows what's going on. They know all the angles of how you're going to wreck yourself. They know how to deal with it. They know it's normal, and they know there's a way through it. So if you felt any of those things, and maybe you've wrecked yourself in the recent weeks, or maybe even last week, blew your account, lost your funded account, whatever. Last week would have been a good week for it. A lot of volatility, a lot of big news. That's what they're designed to do. Blow your account. They know you're going to get crazy and chase these big price swings. And they hand it to you. Your ass. That's what they're handing it. But you can't do these things and expect to be long-term and successful. You won't be around long enough.
So let's take a trip down memory lane about trading. You see, when I started trading, you are enjoying the DAX and the FTSE and currencies at extremely tight spreads. Back then when I traded, do you know what the spread was in the Dow intraday? You know you can trade the Dow at a 1.5 point spread. Do you know how much I had to pay in spread? in 2000, 2001 when we started trading that? Any takers? 8 points. Someone has done their homework. Yes, intraday, you paid an 8-point spread. Can you imagine trying to make a living trading the Dow with an 8-point spread intraday? And if you wanted a quarterly contract, you had to pay a 16-point spread. And Eurodollar, which is today trading, I don't know what CMC's spread is, but it's probably about a 0.5, 0.6 thereabout. Back then, we paid 3 full points to get into Eurodollar, and dollar yen was a 5 points. I mean, this was you're thinking, holy smoke, how did you not blow up immediately? We did blow up immediately because we paid all our money away in commission and spread. But not only that, we don't have access to what you have access today. I heard, I think his name is Ed, he was talking about that with CMC Markets, you have pattern recognition programs, you will have news, you will have level 2 data, you will have extremely tight spreads. We didn't even have any of that. I spoke to an old colleague of mine who I used to work with in City Index, and we discussed when did City Index actually get their charting package, and we agreed it was probably around 2005 that we actually got a fully working charting package. Yeah, can you imagine trading with a broker today that doesn't have a charting package? No, of course not. Yet, even though that you have far better spreads, you have access to news, you have access to data, you have access to pattern recognition programs that tells you it's a double button, or head and shoulders, and a wedge, and a pennant, etc., and a flag, even though that you have access to way more information in any shape or form, can you trade? No. You're losing as disastrously as we did 20 years ago. And so with the greatest of respect to CMC Market, but you're not going to become the trader you want just because your relationship manager at CMC Markets is a great guy or girl. Nor are you going to become a great trader because the CMC Market platform is great and award-winning. I don't care if it's NASA themselves that has designed the trading platform, won't make a blind bit of difference to your long-term results until you learn to think differently. So what's normal behavior when you get into trading? Oh, let's do one of those weekend courses with one of those gurus, you know. He talks so elegantly and he's really good looking and his smile is from ear to ear. I want a bit of that. Surely he must know. No one can be that good looking and not know what they're talking about. I'm going to learn about candlesticks. I'm going to learn about RSI, MACD, RSI. Ooh, have you heard about that Bollinger Band? It is amazing. What's that Fibonacci thing? A ratio for every season? 38%, 50%, 61%, 78.6%, 88.4%. You ever heard about the secret ratio of 94.6? It's just between you and I and 2,000 pounds of your money. Thank you very much. Unfortunately, it's still not going to make you a penny. Am I annoying you now? Are you bored? Are you thinking, I want technical analysis? I don't want to be told that I am rubbish at this. But you are. Statistically speaking, you are doing what everyone else is doing. And if you continue to do so, you're just going to continue with the inevitable. And I would like to give you an opportunity to get off that path and start thinking differently. See this book here? It's called The Bible of Technical Analysis. Not the King James Bible for Christians, but the Bible for Technical Analysis, written by Edwards and McGee. Were Edwards and McGee traders? Ladies and gentlemen, were Edwards and McGee traders? No, they were not traders. They were journalists. More than 1 million copies of this book has been sold. Normal leads to broke. Following what the brokers are saying, not their advice. And the brokers, they're well-meaning. They want you to do well. Why does a broker want you to do well? Well, hell, the better you do, the more you're going to trade. The more you're going to trade, the more commission you're going to place. It's logic. Of course the brokers want you to do well. CMC included. I'm not knocking CMC, but CMC are not traders. IG is not traders. City Index are not trading. Gain Capital are not traders. They're not the ones where you should be getting your guidance from. Sure, by all means, learn about technical analysis, but technical analysis has never made anyone anything. You're not going to get rich from trading by learning technical analysis. In short, your problem is not that you don't know enough about technical analysis. Will you trust me on this? That you don't need any more technical analysis. You need a serious review of how you think when you're trading. So let's try with that. My argument is that if 80-90% of people are losing when they're trading CFDs, this is not a broker problem. This is a human problem. And particularly, I think I mentioned it before, I believe that those 80-90% are perfectly rational people. Intelligent, good-looking, smiling, good mums, good dads, good students, good everything. They're just rubbish traders because they haven't learned to think properly. They haven't learned to deal with fear. So what I would like to do, what I would like to propose is, if everyone's normal, please show me what not normal looks like. Please show me what a 10% trader or a 1% trader looks like. And I suppose that's why I'm invited tonight. So here's a normal person, according to Google. How does a normal person think? Well, if you ask Rodriguez from FXCM, the broker, he did a research on 25,000 of their traders who had executed 43 million trades over a 15-month period. Here's the shocker. Those 43 million trades actually had more winning trades than losing trades. Yeah, the FXCM traders, they were good traders. They had a hit rate of 62%. That's not bad. The problem is that when they won on average 48 points. This is all trading currencies, but when they lost 82 points. You see, if this had been an analysis of my trades or your trades, we could say, well, you probably had a bad week or a bad month. But when you investigate 25,000 people and their behavior, it's no longer bad luck. That's a sample space that is worthy of an investigation. And if it had been a couple of trades, 10 trades, 100 trades, you can argue, well, it's a small sample space. But 43 million trades, of which the majority of them were executed in Eurodollar, one of the most liquid instruments globally, that's a pattern. I am proud to say that I have written a book that will be published next year. I received an email back from the publisher to say, it's excellent. So, well, that's good news. Actually, a word of warning to those of you who like to write a book. Writing a book for me was an incredibly cathartic exercise. I had something that was just boiling up inside me like Vesuvio, and it just exploded down on paper, and I just wrote and wrote and wrote for 2 months. And before I knew it, I'd written 60,000 words and 200 pages. But they never tell you, those publishers, that writing a book is actually only half the battle. Then comes the editing it, and then you have to do this and that, and before you know it, you're beginning to regret you ever wrote the damn thing. But the titles in themselves is telling a lot about my mindset. Normal is a loser. Show me pain. Do you have a trading philosophy? Everyone's a chart expert. Everyone knows charts. To be continued in March next year, I've been told. So, on the face of it, I was interviewed by CNN in 2005, and they wanted to know, how do your traders, your clients trade? And I said, well, the problem with, and at that point I'd only worked there 5 years. I have another 5 years of experience since then. God, it's horrible to look at yourself 15 years ago and think, oh, geez, I wish I looked like that. People love to find the low in a bear trend. People love to find the top in a bull trend. There were people, when I walked in here, saying, when do you think the crash is coming? What crash? I don't know if there's a crash coming. What crystal ball is it that you're looking at? Because I just see a market that keeps making all-time highs. Sure, let's talk about a crash if the market's in a downtrend. Let's not talk about a crash when the market is sitting at its all-time high. People think every reaction in a trend is the beginning of a new trend. I would be sitting there night after night watching the market fall or rise, and our client, sure as hell, the moment the market just ticked in the other direction by a little bit, they would pile on as if the trend had now changed. So my argument here is that people are generally fearful when they're hopeful, and they are hopeful when they're fearful, and I will explain that momentarily. Now, what is normal behavior? I am letting my losses run. Why am I doing that? What am I telling myself? Well, I'm telling myself that I hope that this market is going to turn around. But the real reason is I would like to avoid pain. We have a brain which is millions of years old, and it has one primary function, and that is to keep you alive at all costs. And by the way, also love to make sure that you never experience any pain. Some people, in particular psychologists, refer to this as the ego. It wants to make sure that you maintain your ego preservation, your state of mind where everything is rosy and good. So you'll do anything to avoid pain. Not you, but this thing up here. And it doesn't matter what scenario I throw at you. I'm letting my loss run because the Intercase says so, or the Fibonacci says so, but actually you want to avoid pain. I'm taking my profits because, hey, you can't go broke from taking a profit. Still, it's still you avoiding pain. Why? Well, because you hate the idea that the market is going to take back some of your profits. In a moment, I'm going to show you one of my charts after the fact. Not with I bought here, I sold here, but how much I made and how much I lost. I am winning, so I'm reducing my stake size. Why would you do that? Well, because I want to take it easy now. Nope. You want to avoid pain. You can't bear the fact that you made 400 pounds for the day, and God forbid that those 400 pounds would disappear. Let me ask you a different question. I'm just going to come out here on the floor for a second because I'm tired of standing there. Imagine that you made 1,000 pounds on the day versus you lost 1,000 pounds on the day. Who is most likely to carry on trading? The person that have made 1,000 pounds or the person that have lost 1,000 pounds? The person who has lost 1,000 pounds is far more likely to carry on trading because God forbid that he carries on that pain into the night, and he will do anything to get rid of that pain. But when he's made 1,000 pounds, he'll do anything to protect that because it feels so good to have made 1,000 pounds. So I don't want to jinx it. I could carry on and on and on. I think you should see it for yourself. You're more than welcome, ladies and gentlemen, to have a copy of this presentation. More than welcome. If it can help you, then you can have it. Now, I've been told that I have 5-10 minutes left before you have a well-deserved break and some food. So let's carry on this for the next 10 minutes or so. You'll be happy to know that I'm on slide 48 out of 157. It doesn't bode well for the second half, does it? Did you have plans on going home? Then you may want to call the people at home saying, might be a little late. People are fearful when they're hopeful, and they are hopeful when they should be fearful. What do I mean by that? Imagine that you are sat in a position that is making you the aforementioned 1,000 pounds. You're no longer hoping that 1,000 pounds is going to turn into 2,000 pounds or 3,000 pounds. No. You're fearful that 1,000 pounds is going to be taken from you. And if you are losing 1,000 pounds, you're most likely going to sit there and thinking, wouldn't it be great if this position turned around? You're not fearful that that position is going to get even worse. You're hopeful that it's going to turn around. And if you want to have a fighting chance of making the markets your ATM machine, and this is not a sales pitch, it's a bit of a cliche, I admit that. But if you want to have a fighting chance of making the markets the place where you take money out on a fairly regular basis, you need to turn this around. How are you going to turn around? Well, I have my own ideas. So let's take a look at not so normal. Let's take a look at how I operate and people who are what we call the 1%. Rather than talking about me, which is something I'm not that good at doing, I prefer to throw the attention on some truly great traders. One in particular is someone who I wish I could have met, but he's no longer with us. His name was Charlie D. An excellent book called Charlie D, The Legendary Bond Trader, is something you can buy through Wiley. Here he says, the time you know you've become a good trader is that day you're able to win by holding on to a winning position, and rather than taking half profits, you're adding to your winning position. Rather than beginning to think, where should I get out? You're beginning to think, how can I get deeper in? How can I commit more? He says, and he is a floor trader at Chicago Board of Trade, he says, there are many people in here, in the pit, that have traded for a long time, who have never added to a winning position. Have any of you ever added to a losing trade? Sure we have. Oh, of course we've added. You know, you bought at 20 and then it goes down to 10. You're thinking, it looked good at 20. It looks even better at 10. But how many of us have bought at 20 and then bought more at 30 and bought more at 40 and bought more at 50? Now their raised hands are becoming few and far between. Sure, there will be people who have done it and good on you. But it's very difficult emotionally to add to a winning trade. It's a lot easier to add to a losing trade because, hey, you feel like you're getting a bargain. You feel like you're buying something which is cheap. And hey, when we started learning about trading, what were we told? We were told, buy low and sell high. Quite possibly the most expensive piece of advice ever dished out in the history of mankind. Because every single time I bought low, it always went lower. And every single time I tried to short high, it always seemed to know that I was in and it would go even higher. No, I prefer to buy high and sell even higher. And I sure do like to sell short low and cover even lower. So, Charlie D goes on to say that it's in our human nature to want to cut our winnings. You bought at 6 and you can get out at 7. Get me out! I'll take that profit. That's just human nature. That's who we are. So, he says, if you want to be really good at this, you need to accept that everything you do when you're profitable hurts. It feels uncomfortable. If you're in a position and it doesn't feel uncomfortable, you're probably not betting big enough. I want to repeat that. When you're a good trader, everything you do hurts. And I'm not talking about a smack in the hand kind of hurts or a smack in the bottom kind of hurts. Like, if it doesn't feel uncomfortable, you're probably not pressing the position big enough. Here's a snapshot from an open trade. This is equating to being £100,000 in profit. This is not the result of normal thinking. You see, what I'm doing here is, see if I can navigate this gizmo. Let's just stand over here. My first entry, the market is trading at 25,135, but my first entry was at 25,458. But as the market falls, I keep adding to my winning position. What do most people do when they are in a winning position? Now, I know the answer because I sat and watched this for 10 years. When you're in a winning position, what do? I mean, humor me here. Take half profit, nip a little bit more, move the stop loss down so it is almost meaningless to have a stop loss because you're going to be stopped out by the slightest movement in the other direction. People are great at taking half profits. They're just not great at taking half losses. We love to take a bit of a profit home because it feels good. It feels like we're doing the right thing. Why on earth would I risk losing some of my open profits? You can't go broke taking a profit. That's what the books are telling me. Now, the amount of time that I've had 10 or 20,000 pound open profit positions, that will then turn into a zero, a countless. My trading philosophy, ladies and gentlemen, my trading philosophy is that I will never get out at the maximum profit potential, ever. And that is the only reason why I am still running this position. Not, actually, that would be disastrous if I was still running it, because Dow is in 29,000. But in this case, where did I get out? Did I get out at the absolute maximum profit potential? No, I most certainly did not. Now, it's come to the point where I probably need to take a break. So I think I'd like to do that with this slide here. And then we'll carry on after the break. The mental foundation for profitable trading is, are you prepared to do what the 90% are not doing? And of course the answer is, yeah, of course I'm prepared to do that. I'll do anything for profit. But actually you don't really fully understand what is required. It takes a lot of introspection, which I'll cover in the second half. But I am aware of my worst habits. I am aware of my weaknesses. And I have a routine to counteract those. I am constantly pushing myself. You never get to trade 100, 200, 300 pounds a point unless you constantly push the envelope. There are some people in here who are well past 50 years old, including myself. Now, interesting story to set you off for your dinner. I assume most people in here have a driver's license, and I assume that many people in here have driven for many years. And we all consider ourselves good drivers. And I thought I was a good driver. I mean, I've been driving since I was 17, which is a miracle because you're not allowed in Denmark to drive until you're 18. Don't ask me how, but that's the fact. And now I'm 50, and so I've been driving for what? 32 years, 33 years. And then a friend of mine decided he wanted to give me a present for my birthday. It was one of those red letter days where you go out on a race course. It could have been any, red letter could have been anything, but this was, you get to drive some very fast cars. And then I realized just how bad a driver I am. Because when it really is a matter of putting, what do you say in England? Pedal to the metal, or yeah, is that the right saying? When you really do press that accelerator and you're not just driving straight ahead down the M6, but you have twists and turns, that's when you know how bad a driver you truly are. So we can do something for 30 years without actually be particularly good at it. And you can continue down this path of trading for the next 30 years. But there is an enormously high probability that you're never going to fulfill your maximum potential unless you begin to, shall I say, stop staring so much at the chart and begin to cultivate a very different mind. Let me give you an idea of the kind of technical analysis that I deploy. I think the odds are high you'll never have heard of that kind of technical analysis. So let me give you a sample of the kind of preparation I do ahead of a trading day. Say for the sake of the argument that it is Sunday night and I'm preparing for trading on Monday, or even I'm preparing for trading on Monday. I have developed a technical analysis that I called scenario analysis. Scenario analysis is something I invented myself. I have never heard anyone discuss it, talk it, use it. Let me give you an idea of what I mean by scenario analysis. Imagine the scenario in the Dow Jones Index. Or it could have been anything that I have researched. Say the scenario is Friday's trading was unable to trade above the highs on Thursday. So as you observe over the weekend, how did the market trade on Friday versus how was it trading on Thursday? And if during Friday the Dow was unable to get above the highest point that we saw on Thursday, it has severe ramifications for what you can expect on the Monday. my research suggests that there is a 95% chance that during Monday, the Dow will trade down to the lows seen on Friday, and in most cases will trade lower. Now, what is that statistics based on? This is based on manual analysis of the Dow Jones on charts spanning back from 2008 until 2019. Off the top of my head, over the last year, there has been 24 occurrences where I, before I went into the trading session on Monday, could observe that the Dow was unable, during Friday's trading session, to trade above the highs of Thursday. And out of those 24 occurrences, in 21 of those 24 occurrences, the market traded below the lows of the Friday. Now, is that data crunching? Is it technical analysis? I don't know, call it what you want. But when I go into the trading session on a Monday, I know technical analysis on par with how you know technical analysis. I know the patterns, I know the trend lines, I know the ratios, I know the day's high, the week's high, the day's low, the week low. But armed with the knowledge of how the market has tended to react based on what has happened in what I call the scenario analysis, I am in a position to place myself in the market and hopefully taking advantage. And if I'm being run into one of those 3 times when it didn't work, well, then the stop loss will take care of the rest. The framework that I operate with. You see, I've accepted with every inch of my being, every DNA, that I have absolutely no idea if the next trade will be the best trade of my life or if it will be a small loss. No idea. Perhaps it's the moment now where I tell you that every single time that I go into a trade, I will go for the jugular. I will go in thinking this is going to be an amazing trade, and I will want to squeeze it for every point that I can get out of it. Because I always get quite annoyed and disappointed when I get stopped out and it turns out to be a nothing. I know with every fiber of my body that if I'm not disciplined and prepared mentally, I can experience what I experienced during the flash crash of 2010, where I, on paper, was technically broke. All the money that I have made over the last decade of trading were eventually wiped from existence. And the only reason, by the grace of God or whoever else was looking after me that day, the broker's automated stop system didn't kick in. And those of you who remember that day, and some of us remember it very vividly, you'll know that the flash crash actually only lasted a few seconds, the really, really bad part of it. It was still pretty bad, but it recovered relatively quickly, followed down by another attempt, and then we started climbing up till near break even. And on paper, I was wiped, but when all was said and done, I had lost 2,000 pounds. And I assure you, ladies and gentlemen, that was the happiest 2,000 pounds I have ever lost. I'm not a fortune teller, meaning I don't go into the trading day thinking I know what's going to happen. And I get quite annoyed when I speak to my friends and colleagues. You know, they're great people, but it annoys me when people say, Dow's headed for 30,000, I know it. So, well, then put the position on, but don't bore me with it. I want to have a complete free mind. I don't want to be told what you think because it will sway me. I want to have a blank canvas when I trade. Because I know that in order for me to avoid being like the 90%, I need to think Completely the opposite of the 90%. And the 90%, they're engaged with targets. Oh, the Dow is going to go here, and then it's going to go here. And Elliott wave analysis perpetuates those things. I don't want to do that. Here's another piece of advice for you. You know that the vast majority of people, when they make money, they'll have a tendency to reduce their trading size because they want to avoid the pain of losing some of their gains. And I swear to God, 99% of the trading population just doesn't get it. When I win, I don't bet less. I bet more. The more I win, the higher I bet. See, you can think of this in two ways. You can say, well, I like to think like the 10%, or you can turn it on its head and say, I'd like to not think like the 90%. And so you almost can do a self-analysis and say, well, how is it that I tend to think? And it doesn't matter whether you trade currencies or commodities. It doesn't matter whether you're a scalper, an intraday trader, or an investor. I participate in a radio program in Denmark where we're each year given 250,000 Danish kroner, which is roughly 25,000 pounds. And our job, there's 3 of us, our job is to grow that money to as much as we can. And we get to keep the spoils, but if we lose, well, then the competition, the people who run the competition, they're the one that takes the loss. It's a rather favorable setup. Some would even say there's an element of moral hazard in there. However, I see it slightly differently. I see it is when I trade in this competition, which I've won 4 years out of 5, and the year that I lost was actually this year, is that when I'm in a position, I don't sit and congratulate myself that it's going well. If I am in a position, be it in some share, and there we're always trading physical shares or ETFs. If I'm in a winning position, I don't sit and congratulate myself. No, I want to get that position bigger and bigger. And yes, there have been many times when I've been in a position that is going well, and then the market takes an unexpected turn, as it does, and all of a sudden this winning position of 5,000 pounds, because we're not trading with leverage, so it's relatively small amounts. So the years that I've won it, it's because I've grown the account by 10, 15, 20%. So we're not talking about 200% gains in a year, but it's because I have compounded my positions. So when I am in a winning position, I don't think like the 90%. I don't sit there and think, when should I get out? When should I get out? When should I get out? Oh, it's getting, oh, did you see that? The market just turned down a little bit. I better get out now. No, I keep thinking, how the hell can I press this position so I can make even more? You see, I want to tell you what I consider a very interesting story by one of the greats. I'm not one of the greats of trading. He's one of the greats of trading. His name is Richard Dennis. He's already been mentioned once tonight, and now he's going to get another mention. But it's not what he says, but it's what people say about him. You see, Richard Dennis, he was a soybean pit trader. And they say about him that while everyone else was engaged in reading the crop reports by the U.S. Agricultural Commission, Richard Dennis instead, he said, I don't care about what the crop reports are going to be. You see, you are far more likely to find him with a publication on the death instinct or Eros and Thanatos than you would about whether the crop reports were going to be good or bad. Because Richard Dennis realized that once the news is out, the news is out. But how you react afterwards will make the humongous difference between you being a winning trader and a losing trader. Now, I say it, and you think, yeah, there's that Dane who's coming over here, blah, 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 blah. He's giving it the old lippy. But when one of the best traders in the world says it, perhaps then it has a little bit of validity. Maybe then you'll sit up and pay attention, because these are not my words. These are the words of one of the all-time legends of trading. He says, a little bit less technical analysis and a little bit more introspection in what the hell is going on in your mind. And it doesn't matter, as I said before, whether you're trading a 5-minute chart or if you are an investor. If you have bought onto a stock which is a runner, why contemplate where you're going to get out? Why not add a little bit to the position? Why not make the position a little bit bigger? Why? Because you're afraid then that what the market has given you is going to take away. Well, hasn't that happened to all of us? You see, adding to winning positions is one of the best antidotes to what the 90% are consistently doing. The 90% love to add to their losing trades. Why? Well, hey, if it was a good purchase at 50, then it's got to be even better purchase at 40, isn't it? Because, hey, we all love a good bargain. How many of you go down to the supermarket on a Saturday morning and thinking, oh my dear Lord, filet is on offer. Chicken is on offer. Even tonight, let's say that you're a man and you're going to go out for a bit of food after this, if it wasn't good enough here. And you go, do you know what? That restaurant over there, they got 2 pizzas for the price of 1. Whoop, let's go over there. If you had the choice between buying a pizza that was twice as expensive today than it was yesterday, are you going to go for that? No, you're not. You would prefer the half-price pizza because that's the way that we are put together. We prefer things where we feel we are getting a bargain. But what's perverse about the industry that we are trying to make a living in is that it makes more sense to buy something today because today it's more expensive than it was yesterday. That's called a trend. But none of us like to buy a share today at £5 if it was £4.50 yesterday. But you love buying a share at £4 if it was yesterday was £4.50 because you feel like I'm getting a bargain here. But the sad truth is that the financial markets is not a supermarket. It doesn't work like that. If it's cheap in a supermarket, by all means, you got my blessing to load up if you want. But please don't load up because something in the financial markets is cheaper today than it was yesterday. Because that's just not the way that it works. And for 10 years, I sat and watched people do exactly that. For 10 years, I had to suffer the audacity of watching people buying the Dow all the way down and down and down and down and down. Why, Bill? Because they were living under the illusion that if it was good yesterday, it's got to be even better today. Is that really who you want to be? I don't think you do. And he certainly didn't. He was infamous for adding to his winning positions. Infamous. I'm going to go off script for a second here and I'll tell you a good story. You see, he hired traders. He had a dispute. He had a dispute with one of his colleagues called William Eckert. William Eckert, he's a professor in mathematics. Brilliant trader, brilliant mind. And they had this bet. Trading? No, you're born a trader. You can't teach trading. No, you're born a trader, you're not a trader. And I don't know which one of them said, no, it can be taught. They said, right, let's bet. Let's find out. Let's hire some traders and settle this bet once and for all. We are going to get some people in. We're going to train them in our money management and our entry techniques. And the techniques they had, they were very complicated, extremely complicated. That's sarcasm, by the way. Their entry technique was, if the market trades at its highest for the last 20 days, then that's your buy signal. Yeah, that it doesn't get simpler than that, does it? I.e., if the market sits at its highest for the last 20 days, buy. And if the market sits at its lowest for the last 20 days, sell short. So, they got the 10 people in, and I happened to get to know one of them, Russell. Was a world-class backgammon player, and that's why he got hired. Richard and William Eckert, they thought, well, guys like that, they will know statistics, they'll know odds. And I happened to get to know Russell when he was in London, and he said, do you know what the worst thing about being a turtle trader was? It was that you were not allowed to take your profit. You could be long soybeans or wheat, and it would be climbing, climbing, and climbing, and climbing. And you would be making $1 million, $2 million, $10 million, $20 million, $30 million, but you were not allowed to guess where the top was. And it was unbearable. You sat there, and that money was burning a hole in your pocket. You were just not allowed, because what Richard Dennis advocated was that out of 100 trades you execute, 97 of them are going to be nah. But 3 of them are going to be ka-ching. and you never know which one of the hundreds it is. So you just had to sit there on your bottom, sit on your hands, and I swear to you, he says, the hardest thing in the world is to sit on your hands and just let the market do what the market does. And in the end, he bowed out. He just couldn't hack that way of trading anymore. Now, would you agree with me that there was nothing on paper, there was nothing difficult about the entry system. There was nothing difficult about adding to the winning positions. They had a mathematical formula. Ladies and gentlemen, you can look that formula up on Google if you want to. It's not a secret anymore, but the system still works. It's efficient. It's just very difficult to trade. Not because it's difficult to understand, but because sitting on your is very difficult. Would you agree with me, young man? Very difficult to do nothing in the face of a winning position. Or you want to tinker a little bit with it, or maybe take a little bit of profit. But leaving a winning position alone, that's why trading is difficult. It's not difficult to understand Fibonacci and stochastics and all these things. No. Fighting our natural urges is what makes trading difficult. And he knew it. And that's why he spent all his mental resources on handling that side of trading, because he thought, you know what? It can't be that hard. The market's moving higher. I need to buy it. Oh. We had a little bet before this show started on how many times I would trip over this. That was number 2. So this might be a little bit new age for you, and I appreciate that, but I make sure, to the best of my ability, that I look after myself. Make sure I'm rested, have a strong body. I also have a belief that you can't have a standard attitude about money and do well in this business. It is absolutely no good if I'm in a winning position and I'm beginning to think, you know what? I've just lost the same as buying a new car. Or, as my ex-wife would say, you just lost me 1,500 pairs of Louboutin. It's a shoe. Well, I didn't know what it was until I was told. Or, even worse, if you take your profit now, you can buy so-and-so and so-and-so. It is a death sentence to a good position to begin to equate your open profit to what you can, yes, that you can buy for it. So, how do you become friends with those fears that we have, those uncomfortable feelings that we have? Well, I'm going to show you a picture now, and I'm just going to let that sit for 30 seconds. I'm going to time it, and I want you to imagine you're there. Are you okay with that? It's not a horrible picture. Imagine that's you. Can you feel that in your stomach? There you are. Oh yeah, that's vertical. That's not a film trick. That's not trick photography. That's real. That is Alex Hannon climbing El Cap in Yosemite National Park. I don't know how you feel about it, but looking at those pictures is part of my preparation. And then the next step in my preparation, and this is preparation I do in the morning, and if I have the choice between looking at charts, preparing, doing my ratios, all these things, or I just have time for mental analysis, mental analysis wins 100 out of 100. And the way I do it, this is an example of a trade sheet for me. I'm going to come out here just to explain. What you're seeing here is I believe it's the DAX during the day. I can do it very quickly. You know what? I can't even. It must be the Dow because it's in the 23,000. What you're seeing here are my profits and losses during the day. So there's some minus 25,000 pounds, minus 10,000 pounds, plus 57,000 pounds, plus 20,000 pounds, plus 20,000 pounds. So there's some whopping profits in there, some whopping losses. But more interestingly is this one here, for example, is I was plus 20,000 pounds, but I only made 8,000 pounds out of it. So I have a print house where I live that have taken of these. And if I had been allowed to show you my laptop, you will see that I have a PowerPoint presentation with approximately 1,300 slides. All of those slides show my past trades with handwritten notes that I've then scanned. So I got a print house to then print those trades up in I think you call it A3 size. So I will select 20, 30 of those slides. It's a rather large pile I can choose from. So I'll just take 20 or 30 of these in the morning as I mentally prepare. And I'll remind myself what it is that I'm trying to achieve. Am I sour that I only got 8,000 pounds out of the position? No, because that's part and parcel of the game. I need to remind my mind in the morning ahead of the trading game starting that it is perfectly okay to see a big profit turn into a small profit, because how else are you going to get an even bigger profit? And you might think, I'm never going to trade 200 pounds a point or 300 pounds a point. I did this when I was trading 5 pounds a point. And if I hadn't done it trading 5 pounds a point, I would have never gotten to 6 pounds a point. And 7 pounds a point, and so forth. It's not the size, the number of digits that you are trading. It's about trading the right way. And ladies and gentlemen, do you now understand why this has got nothing to do with technical analysis? While technical analysis is an inferior way of getting money out of the market. And mind is be-all, end-all. It is paramount to think the right way, because otherwise you are going to be emotionally robbed of your greatest opportunity. And my preparation, it's not like an expensive course that I had to take or a book that I had to read or anything like that. No, young man, it was just, it was basically just printing it out and be accountable. So trying to avoid it next time, just like the mayonnaise. So next time you offer me a portion of chips, sure, I'll take the chips, but I'll probably hold the mayonnaise because I don't want to add another 300 calories. Because I'd like to spend them on something else, like ice cream, which is better than mayonnaise in my book. And I spend just as much time mentally preparing myself. Incidentally, the gentleman climbing this wall here, Alex Hannon, when he climbed El Cap, first of all, the feat is captured in a movie called Free Solo, which won an Oscar for Best Documentary by National Geographic. Just watching it is worse than watching Friday the 13th times 10. I mean, this is fear on an entirely different scale. But what I find incredibly interesting is his preparation. Sure, he did his push-ups and sit-ups and all of these things, climbing, but he spent 2 years preparing for it, going over it, planning the routes. But his mental preparation was as thorough as his physical preparation. Because you know what? Now is not a good time to be in doubt. Now is not a good time to think whether you left the stove on. Now, this is a world-class example of someone being in the present, right here, right now. And when I'm in big positions, the worst thing that I can begin to do is to entertain the idea of, hey, Hugard, if you take your profit now, you can wipe that loss you had from yesterday. What has yesterday got to do with today? Do you follow me? This idea of an emotional reset. Well, I don't play for emotional reset. Yesterday's trade has got nothing to do with today's trade. You've never done it, of course, but other people, lesser mortals, they've been in a position where they've closed a position purely because it would reset the account. You have a £10,000 account and you lost £2,000, and now you're plus £2,000. I'm just going to take the profit because now I'm back to break even. Of course, not you guys, but other people. So, my argument is that all of those people that lose, they are really good at chart analysis. And they don't lose because they're not good at chart analysis. It's because there's so much more to trading than a head and shoulder pattern. Let's take a look behind the curtain of what's going on. I brought this picture in here because I thought it was really stylish. I love that picture. And the villain was Danish. We were quite proud of that. Normally you're not overly proud that the villain is Danish, but he was, and we thought he made a fantastic villain. You know, like Goldfinger, that kind of... But when you look at it, it also epitomizes what trading is about. There's money on the table. And as they say in the movie, when you're playing poker, you're not playing your cards. You're playing the man opposite you. So there are days when I look like this, and you are raking in the money. And then there's days when I look like this. Despite my mental preparation, things are just not going my way, and you are bleeding. Now, I hear people who will stop trading because they've had 3 losing trades in a row or 5 losing trades in a row. I never entertain that thought. Because then what you're really saying is that the trades are interconnected. That somehow those 3 trades are connected, and that will have an influence on the 4th. Sure, if I have a throbbing migraine, then that's a good argument for stopping trading. Or if there's a gas leak in the environment and you can smell gas and that's the reason why you have 3 losing trades, by all means stop trading. But otherwise, if you're following your strategy and you're doing everything right, why on earth would you stop trading? It's a mental mindset thing. So I live and die by, I must control my mind. Otherwise, I can't control my future. Practice makes perfect, except that it doesn't. And I believe this is the reason why people continue to lose, ladies and gentlemen. Because you can practice and practice and practice. You can do everything right. You can read all the books, take all the weekend courses, and still get nowhere in trading. Why? Because practice makes permanent. And there are literally thousands of trading books and millions of hours of web seminars that is supposed to help you trade well. But it doesn't. And all you are achieving by training the same way is merely cementing your bad behavior. Okay. Now, I want to tell you a story that truly changed me as a person. Do you remember the story of Northern Rock? When I tell this story in Denmark, people don't know Northern Rock, but I imagine you guys know Northern Rock. What I found disturbing about Northern Rock was that when I worked at City Index, no one cared about Northern Rock. It had a base around 600 for a long time. And then in late 2005, it was as if it went on fire. And it rallied 50%. From 700 to 1300, that's not even 50%, that won't do it. 80, 90%. But do you think that any of the City Index clients were on board this? No, they weren't. But it gets interesting. Because Northern Rock peaked, did a double top, and then fell back. And then the curious things happened. No one had been interested in Northern Rock. But now they became interested in it. All of a sudden, people began to buy Northern Rock. Now, a broker doesn't ask a client, why do you buy Northern Rock? But they did. Now, my thinking is that they thought that Northern Rock had become cheap. I call it the supermarket mentality. And the supermarket mentality is a mentality that you see in investors, traders, scalpers, and anything in between. And it doesn't matter whether you're based here in the UK or you're perhaps based in Ukraine, where I gave this talk in Kiev. Now, I may not speak Russian, but I sure as hell know 11% off or 14% off. That's universal. And it could be in Holland, where I also gave a talk. And I might not be the best at Dutch, but I can see 35% off or halve price, which is half price. Yeah? It's universal. It appeals to us. You love a good bargain. You go down to the car dealer and he says, you know what? It's your lucky day. I'll give you an extra 1,000 for that thing that you call a car out there on the forecourt because it's you. And I feel generous. Yeah, sure. And you feel like, yay, I'm getting another £1,000 for that. Was that a sign for me to stop? It is universal. We all suffer from it. And I'm okay with it when I'm down in the supermarket. Quite all right. By all means, buy 2 chickens for the price of 1 chicken. Or load up on butter ahead of Christmas. Please, if it's on offer. I'm the worst. I go down there and I'm thinking to myself, here I am, Saturday morning, and oh my God, toilet paper is on offer. How many times have I come home with 16 rolls of toilet paper? You look at my cupboard, there's toilet paper for a 4th World War. I can supply you all with toilet paper because I love a good bargain. And I laugh at myself. I literally walk around in the supermarket giggling at my behavior because here I am, a hard-nosed trader that would never buy something which is cheap. And there I am, like the worst of them. Hand soap is on offer. Ho, ho, ho. You know that trick when you have the trolley and you take your arm in behind the shelf and you sort of scoop the whole thing out into the basket trolley? That's how I shop when it's on offer. Sadly, the financial market is a very different proposition. And what really affected me was a phone call that I received after that long thing there. It was Saturday morning and someone called me and said, hey, you gave a talk up here up north and I just wondered if I could have your opinion. My brother and I want to invest in Northern Rock because we think that it's a fantastic stock and it's probably a rare opportunity that is so cheap. What do you think about that? And I said, well, I'm not so sure it's a good idea. And there's 2 reasons for that. 1, supermarket aside, that mentality doesn't work in the financial market. And secondly, let's say you do buy it here and it miraculously does turn around. You now forged a pathway in your mind that says, hey, next time a really good stock comes along and it's fallen 66% from its peak, now might be a good time to buy as well. And you might get away with it the first time, you might get away with it the second time, but overall, you are playing Russian roulette, and sooner or later, you are going to get your head handed on a silver platter. Thank you very much. And I don't know, he probably went ahead and bought it anyway. But this is the story of Northern Rock, and it happened 100 meters from where we are today, approximately 12 years ago. People queuing up. And that picture is a fascinating picture, ladies and gentlemen. Why? Because the night before, the government had announced that no account depositor of Northern Rock would lose as much as a penny. Yet even though the government of all entities had guaranteed people's deposits, people still queued up. Well, if you don't trust the government to honor an IOU, who will you trust? It was pointless to queue up. It was a futile exercise. The money were guaranteed, but such is the power of fear. And it made an impression on me. And it leads me on to a story that I'm not particularly proud of telling because I think that the Me Too generation has done an incredible amount of work to shine light on behavior by men that shouldn't be there. Nevertheless, in a much less illuminous times, the father of modern economics likened speculation to a beauty contest. He said, you will be presented in front of you 30 beautiful ladies. And your job is not to say who's the prettiest. No, your job is to say, who do everyone else think is the prettiest and the second prettiest and the third prettiest? That was his premise for the financial markets. Our job is not necessarily to think about the markets in the context of what we think will happen, but to think about what do I think you think? What do I think you think and you think and you think? He called this once removed thinking. The idea of don't attack the market from the point of view of where do I think it's going to go? Think where do everyone else thinks it's going to go? He likened it to a beauty contest where the job wasn't to select who you thought was the prettiest, but who you thought everyone else would think was the prettiest. Otherwise, you wouldn't win the competition where in the newspaper where this was presented. Okay, so now we come to thinking in scenarios, and this is what I want to cover in the web seminar that we will be holding later on. It will probably be next week by now. I want to start off with a piece of analysis that I did a while ago. This is the statistics of the Dow Jones Index over the last 7,500 trading days, or 30 years. What I find incredibly interesting is that this is the distribution of the losing days and the winning days. Now, when we started trading the Dow 30 years ago, the Dow was trading at 1,700. Today it's trading at 29,000. So however way you think about it, we have been through an amazing bull market over the last 30 years. Yet the distribution of winning days and losing days in the Dow Jones is exactly 50-50. Over those 7,500 trading days, half of them were winning days and half of them were losing days. So for all this talk of technical analysis, when I come to work in the morning, I realize whether we're in a raving bull market or on a devastating bear market, the odds of a winning day or a losing day is 50-50. And it's a sober thought, because you go to work and you're thinking anything can happen. Absolutely anything can happen. So what I would like to show you over the next 15, 20 minutes is to perhaps touch on the things that you had hoped I would touch on an hour and a half ago. And instead I got well traveled down the road of psychology. What you'll see is statistics for the last 256 trading days. And these are some of the questions that I have asked myself and answered. If Thursday is higher than Friday, then what does the following Monday look like? If I only traded extended bars on a scalp basis, how would I perform? Would I make money? Is there evidence to support that what Monday starts, Wednesday will continue? How often is the high or the low of the Dow Jones made in the first 30 minutes of trading? How often do gaps occur, and how often are they filled? How often does a trend day occur? And if you don't know what a trend day is, you will. Are there any common denominations between strong trend days? Is there support for the comment that if you have a strong Friday, you'll have a strong Monday? If Tuesday is lower than Monday, then what does Wednesday look like? These are some of the questions that I have asked myself. And the reason why I ask myself those questions is because it gives me a roadmap of what I can expect. Doesn't necessarily mean it will happen exactly as I hoped, but it's an incredible guide into what I can expect. And it has been invaluable for my trading. Let's take an example. How often is Monday the high or the low of the week? Not a particularly interesting question, because frankly, I will only know until Friday night whether Monday was the high of the week or the low of the week. But it actually happens that 60% of all trading weeks, Monday is the high of the week. Now, this information by itself is not particularly helpful. However, say you prepare for trading on a Thursday, and you see that Monday so far is the highest day of the week. Could that piece of information help you when you are trading the Dow? And by the way, why am I so focused on the Dow? The fact of the matter, if the spread betting companies and the CFD companies were reporting what products were traded, you will find that Dow Jones is one of the most traded products. I happen to know a CEO of a spread betting company here in the UK who has stated for me that 90% of all their trades by volume and by stake size are executed in the Dow Jones Index. Yes, wow, that's what I thought too. So let's take a look at it. The result I'll show you, they're manually tested. It means that I have printed out about 7,500 charts that I go through manually. Yes, it's quite the library I have at home. Maybe not everyone's idea of a library. I have asked myself this question. If Monday so far is the highest traded point for the last 3 days, i.e. Monday, Tuesday, Wednesday, then how often is Thursday going to trade below the low of Wednesday? I found that there was a total of 25 times when I was faced with this possibility. And out of those 25 times, Dow traded below the Wednesday low 21 out of those 25 times. To me, that's a significant piece of information. Let me show you some examples. Over here is Monday, then Tuesday, and then Wednesday, and then finally Thursday. Another example. Monday is the high, and by the time we get to Thursday, big move down, even though it was a gap up. Another good example, and I will show you bad examples too. This is not a one-way street where I'm just trying to present the facts in a biased way. No, I'll present it as is. Monday, Tuesday, Wednesday, Thursday. I call this scenario analysis, and I have never ever come across anyone dissecting the markets that they're trading in this manner. Let's carry on. If Thursday is higher than Friday, then what does Monday look like? Over the last 2 weeks, there were 21 instances where the price action on Friday was unable to trade above the highest point of the previous day, which was Thursday. I then looked at what happened on the following Monday, and if there was a holiday on the Monday, I would view the price action on the Tuesday. Considering the random nature of the markets, remember the random nature of the markets? Over the last 30 years, we've had 7,500 trading days, and out of those 7,500 trading days, half of them were winning days and half of them were losing days. That's random. Yet out of those 21 instances, what you're seeing here is Thursday and Friday, and then the subsequent Monday. And you'll see that's a rather sizable gap. One more example, Thursday, Friday, and on the following chart, Monday. A very recent example from 2 weeks ago, Thursday, Friday, and then a big gap down on the Monday. Do you think I go home short on a Friday night? Of course I do. Have I sometimes got my head handed to me on a Monday morning when the market opens? Of course I have. But the stats are outrageously compelling. 20 out of 21 times, based on the last 252 trading days, based on the last 21 observations, the market has traded lower on the Monday. As my friend put it, he was rather minion-like. What? Yes. Gaps. How often do gaps? I've investigated every single gap since 2008. And I found that the odds of a gap being filled on the day is 58%. And here I'm talking about gaps more than 10 points. We're not caring about a gap of a 5 point. But any gap more than 10 points, there's a 58% chance that the gap will get filled on the day. So that you'll have to admit with me, that's kind of random. That's the kind of statistics that you're thinking, I can't really use that. But that's okay. Oh my God. Ladies and gentlemen, I once investigated the tide in the Hudson River and correlated with the S&P 500 futures. It was an immensely interesting project. Taking the tide table from the Hudson River, drawing it on a chart, and then correlating it with the S&P 500. Do you know what I found? There's absolutely no correlation between the tide in the Hudson River and the S&P 500 futures, but it was interesting. And I thought I was onto something there. And every now and then I thought, this is looking promising. But when I viewed the whole thing dispassionately, I came to the conclusion that there's absolutely zero correlation between the tide in the Hudson River. You may ask, how did you get onto such a crazy idea of the correlation of the tide to the S&P 500? Well, you've heard the idea that the full moon will influence the water. And, you've probably heard that notion of, lunar tech. It comes from luna, full moon. And so the idea was thinking, hang on. If the moon can affect the waters to such an extent in the Hudson River, surely it must be able to affect us. No, it doesn't. I don't care. I actually studied this because I was quite curious, and this has got nothing to do with trading, but the evidence, the scientific evidence on the effect of the full moon on us, it is just rubbish. There's zero understanding, but that's the danger of half knowledge, half wisdom. A nurse comes out, that was a crazy night in this hospital. Oh my God, it's full moon. This is what we call an observational bias. So the next time, that was a crazy night. But you're forgetting all the other nights that was absolutely quiet when it was full moon. Anyway, 58% doesn't really make a trend, does it? It's slightly biased to one side, but it's still pretty random. However, if I look at all the times when the gap is not filled on the day, I'm beginning to get something which is a little harder hitting evidence. I found that 78% of all gaps get filled at least within 3 days. So if you have an unfilled gap on day 2 and you're coming to day 3, you're thinking, there's 4 chances out of 5 that we're going to fill this gap today. It doesn't mean that I necessarily take a position according, but it's good knowledge to have in your background. See, this is what I call awareness, just like the mayonnaise example. I'm aware that it is there. The higher the day and the lower the day. No, I don't know if this is any interest to you, but when I trade, where I make my biggest killings isn't when the market is having what we call a trend day. A trend day is defined by that the high of the day or the low of the day, not that I know it at that time, the high of the day or the low of the day occurs very early in the trading day. And by the time the market closes, the market has moved to the exact opposite. It closes near the high of the day or the low of the day. So you're virtually just having a one straight line all day or one straight line. And I always play for that. That means it's very important for me to know what the odds are of the higher the day or the lower of the day being made early in the trading day. And would you believe it? Out of 100 trading days in the Dow Jones, 20 of those 100 trading days, the very first bar that you see at 2:30 in the afternoon when the Dow Jones open is going to be the high of the day or the low of the day. I think that's quite interesting. I can see you share my absolute passion for that. That's quite all right. I know it's getting late in the evening. But by 30 minutes into the trading session, or what I call bar 7, bar 8, there's now a 50% chance that we have already seen the high of the day or the low of the day. And by the time we're getting to an hour and a half, there's now 70% chance that we have already seen the high of the day or the low of the day. And by the time that we hit the 18th bar, now there's 12 bars in an hour, so this would by definition be an hour and a half into the trading session. There's a 90% chance that we at that point have already seen the high of the day or the low of the day.
I'd like to introduce you all to Trevor Neal. Trevor Neal's been in the markets for almost 40 years now, I believe. He specialises in technical analysis, and you're going to get a bit of a demonstration today on some of the strategies he used. He started off on the London Commodities Exchange, I believe.
Yes.
Has been the head of technical analysis at Bloomberg, so he's got a wealth of information and expertise. Yeah, I'll pass you over to Trevor, and we'll go from there.
Thank you very much indeed. I work in a sort of institutional environment. I work with big traders, bankers, oil companies, those sort of things. And one of the wonderful things about technical analysis is that technical analysis is a very democratic thing. Actually, I can tell you, you're at no particular disadvantage to those people in those big dealing rooms there. You've got charting, they've basically got very similar indicators as you. They haven't got other ones that you haven't got. They've got powerful, very expensive screens that have maybe more data than you would really want, but their ability to analyze it is not greater than yours. You know, it's just you can become a good technical analyst, just as good as those people. So because they're in big institutions and have big amounts of money, you can be as good as them at doing technical analysis. Now, for people, for you and for them, on a different scale, it's all a matter of choice. What should I do? I've got many things I can do. I've got a limited amount of capital. They have limited amounts of capital too, and mandates which only allow them to do certain things. But we've got a finite amount. But we've got lots of things that we can participate in and lots of opportunities. And the difficulty is making the choice of what's the best thing to do. And what I want to show you today is to do with making a choice about choosing and analysing many things together and seeing them clearly together so that you can make a good choice about what is the best thing to do. So let me just expand on this a little bit. If I talk simply at the beginning, you've got an amount of money, and you've got the option of putting the money simply into the stock market or into bonds. Okay, one of those two things. You've got many different types of graphs which will help you do that, ranging from the very simple to very, very complicated graphs. But here's a graph. There's an old graph. I've deliberately done that. And this is the S&P some time ago. So here's a normal chart without any indicators or trend lines on it of the S&P. So I don't know at this time what you think of the S&P here. But what we're likely to do is do something like this, is to crowd it out with a lot of indicators, and you can recognize we've got Bollinger Bands here, we've got the parabolic, we've got the MACD, we've got the stochastic, and we've got the RSI on this. And this might be a typical trader's chart, which is fine for analyzing this security. But it doesn't tell you whether this is a good thing to do compared to something else. And that becomes very complicated when you're trying to look across many different opportunities and choices. So let's look at this one here. What do you think? Anybody want to tell me what they think this chart pattern is here? I'm sure there are people here. Man at the back putting up his hand, and he's going to say...
I see it's US, but I was going to say Germany, government bond.
No, it's not. Actually, it's the S&P. The label's on the top. But what I meant was... it's a reverse head and shoulders. So it's a head and shoulders. So here we've got a shoulder, head, and a right shoulder, and the neckline drawn in here. So this is for a chartist, perhaps a bullish looking chart and then opportunity starting to begin to move. So we might say, I think there's opportunity in the S&P at this time. So don't forget, I've got a choice of the S&P or I've got a choice of bonds. And this is a bond ETF here. Now, let's have a look at this chart. And here we've got an uptrend line. We've got this triangle line there. We've got a resistance level. It's challenging that resistance level here. Do you think this is a more bullish or bearish sort of chart? Bullish chart. Would you say it's more bullish than the S&P? Which would you say is more bullish? S&P. The S&P. Now, that's a sort of difficult question to sort of answer. I've just got a choice of two things, and I can only put money in one or the other, theoretically. So which am I going to place my money in? That's a simple choice that I've got to make. So the problem with a simple graph like the one we've just seen there is that they only answer the question, should I invest in it and where should I invest in it? It really doesn't have any context whether this is good compared to something else. It's only a measurement of itself. Now, there is a way of looking at multiple things together in one chart and compare them like with each other. Now, this is a popular technique used in the institutional market. I'm going to show you something here that you can have access to, even though you haven't got a Bloomberg or a Reuters icon or one of these professional platforms. They license this, and it's popular amongst the professional fund managers and professional traders. I'm going to show it to you and explain it to you now, but you can see it. You don't have to have a Bloomberg or a Reuters to see it. So when we talk about this is better than that, we mean in a relative strength basis. This is better relative to the other thing. Relative is something divided by something. This is better than that, and it's outperforming the other thing. So relative strength is actually everything. Which is better is a relative strength question. This is better than that. So that's a relative question. So here we've got, and this would be a normal way of doing this, here we've got the S&P chart, that one with the reverse head and shoulders there. And then we've got the S&P divided by the treasury bonds. So now this is the relative performance of the two. And you could see that at this period here, that equities was coming down in a downtrend in relative performance, but now it started to turn up. So you could say as a chartist, actually the previous condition where there was underperformance in the equity market is actually changing, and equity market is about to